Hello. The company being analyzed today is Viviana Power Tech Limited. This is a company which is aiming to increase its revenue from 219 crores in fiscal year 2025 to 560 crores in fiscal year 2026, which is about to end, then 900 crores of revenue in fiscal year 2027, and finally targeting 1300 crores of revenue for fiscal year 2028. If this is achieved, this target is achieved, this will mean an 81% CAGR in revenue for the next 3 years. And as we can see, in fiscal year 2024, 66 crores in revenue, then 38 crores in revenue, 33, 23, 9 crores in fiscal year 2018. So this company is aiming for some really, really massive growth. Today, we're going to analyze Viviana Power, their financials, what the company actually does, and its future growth plans. A part of them we already covered. So let us start. First, we have a market cap of 704 crores. You can see 704 crores. So it's a pretty small company. Current price of one share, as you can see, 695 rupees. The book value, that is assets minus liabilities value. So book value per share is around 69.5 rupees. Return on equity, return on capital employed are high. That's really important. These figures being high. And the price to earnings ratio is 29.2 times. All right. Here we have the financials of the company. So first, let's go to the revenue. And I don't know if you can see this, but on the bottom it's mentioned all of these figures are in lakhs or rupees, and the margins are of course in percentages. So in fiscal year 2023, the company's revenue was 36 crores. Then it increased to 65.52 crores and finally increased to 218 crores. They're converting lakhs into crores, 2 decimal points increase. Then EBITDA, earnings before interest, taxes, depreciation, and amortization increased from 5.1 crores in fiscal year 2023 to 11.5 crores in fiscal year 2024. Finally, 32.19 crores in fiscal year 25. Here you can see the EBITDA margin 14.3%, then increased to 17.7%, right now 14.7%. Profit after tax grew from 3 crores in fiscal year 2023 to 6.5 crores in fiscal year 2024, finally 20.68 crores in fiscal year 2025. Okay, profit after tax margin was 8.3%, then reached 10%, then reached 9%. Okay, so some pretty phenomenal growth. Then comes the current ratio. Current ratio is current assets divided by current liabilities. If it's more or less, it depends on the industry. If it's a good thing, it's becoming more. It's not necessarily good every time, but interesting. This is good. Debt to equity lower, it's better for the company. 0.56 reach 0.68, 0.48. Are these numbers good? It depends on the industry. Interest coverage ratio. This is important. The EBITDA divided by the interest cost. That is the interest payment you make on the loan. Higher this number, the better. If it's less than one, it's concerning. It really is concerning as far as I know. If it's more than one, better. So 8.5 times interest coverage ratio is very healthy. 4 times is also very healthy. Return on equity has seen a nice rise from 16.8% to 33.7% in just 2 years. That is great. Return on capital employed reaching 34% is also really nice. Book value per share has also grown substantially. So good. Now, what does the company actually do? Viviana Power Tech Limited is engaged in the business of power transmission, distribution, and industrial EPC projects. So, what is EPC? Engineering, procurement, construction. For example, have you seen those power towers? The towers and the wires which transport power. So, Viviana Power, what it does, it will design those towers, it will procure all the material needed for those towers, and it will construct the tower. So, engineering, procurement, construction, EPC of the tower, and finally selling it over to the client. Some of the things they do. First, supply the erection, that is actually erecting the tower, making up its straight, testing and commissioning, that is starting of the power transmission lines. Then development of, I think, extra high voltage substations and power distribution networks, underground cable laying. So the underground cable, making sure it's there. Okay, laying it there. Upgradation and modernization of existing power systems. All right, and look at this. This is a new one. Battery energy storage solution, battery energy storage system, BESS. solutions, and renewable energy infrastructure development. Best solutions is a new segment and it's a very high growth segment in India and all across the world. The projects executed by the company include 500 kilovolt, I think high voltage DC, and 400, 220, 132, 66, and 33 kilovolts of transmission lines. So these are the different voltages of transmission lines and substations to do for, look at this, government utilities, private power utilities, and industries. So government clients are there, private clients are there, and of course industries can be for both. They're catering to state power utilities, private power utility entities, renewable energy developers. So these are the people they're catering to. So renewable energy and state and private power entities, power utilities. They are catering to them. These are the customers. Now, 1,400 crores of order book. The orders it currently has from customers of 1,400 crores plus, it already has, from what I understand. A 70 plus projects have been completed by the company already. 80 plus professionals and 450 plus are the workforce of the company. How many people are working? Now, what are the core offerings? Power transmission lines, constructing and setting up, testing, also commissioning. Then substations, power distribution network establishment, underground cable laying, battery energy storage solutions, manufacturing of distribution transformers. So one manufacturing they do are transformers which are used, from what I understand, which are used in many of the electrical projects. So maybe they sell it, I'm not sure, and maybe they use it also for their own these things. The substations, they use it for the lines. So yeah, licensing with government authorities and utilities, modification and upgradation of systems. We covered this before. Then again, you already saw this. As you can see, massive growth, and I did not cover this. They're expecting profit after tax margin in the range of 9 and 10% for fiscal year 26. So they're expecting profit after tax to reach around 56, 55 crores for fiscal year 2026. 55 crores? Yeah, 9% profit margin. Yeah, 9%, 56 crores will be actually will be a bit different, but 50 something crores, if I'm thinking of the math correctly. Then, okay, let us do the math. Actually, let us do the math. So, 9 into 56. Okay, 50 crores. The 50 crores as a minimum, they're expecting profit after tax, 9% profit after tax margin. Establishing a stronghold in the emerging battery energy storage system segment. BESS is again a booming sector in India, about to be massive. They already have 510 crores worth of secured orders. Already they have these many orders. One is from Gujarat, one is from Rajasthan. Total 100 megawatts plus 65 megawatts, 165 megawatts worth of BESS projects. Then strategic growth anchored by execution excellence. So how are they going to achieve this growth? What are they looking at? One, expansion into renewable EPC. They already do EPC, so they're scaling up their engineering, procurement, and construction capabilities to capitalize on the accelerating demand for solar energy projects. So EPC into renewables. Second is geographic diversification into new geographies, going into energy storage in the form of BESS, robust order book, and transformer manufacturing outlook. They're increasing their manufacturing capacity for transformers. So, I hope this can be read. Current capacity is about 5,000 kilovolt ampere. This is the rating capacity of the transformers, and they can produce 7,000 units of such transformers every year. They're expecting to increase this capacity to 10,000 units, 10,000 transformers per annum by fiscal year 2026, which is about to end. And fiscal year 2027, they want to expand this capacity further, 20,000 transformers per annum. So, how many transformers they're manufacturing? They want to increase that output. And remember this rating, 5,000 kilovolt amperes, the volt amperes it can handle, the transformers can handle. Now they want to increase this to 7 megavolt amperes fiscal year 26 and increase this rating capacity again to 20.5 megavolt amperes. So the total amount of transformers being made is expected to rise. They're targeting to increase this capacity plus the rating capacity, how much volt ampere, I believe, is power. Power they can handle, they're also increasing back. They can take on different types of projects. Geographical presence, quite a lot of states. Jammu Kashmir, Punjab, Haryana, Uttar Pradesh, all the way down to Kerala, Telangana, yeah, Madhya Pradesh, Odisha, Chhattisgarh. North India, a lot in North India, some central, and at the south, I believe we have Kerala and Telangana. Then we got the H1 financials. H1 means first half, which means quarter one plus quarter two of a fiscal year. H2 is second half, which means quarter three and quarter four of a fiscal year. So in H1 of fiscal year 2026 alone, company had 90.62 crores worth of revenue, an 80%, 88% increase from H1 fiscal year 25. EBITDA rose by 136%. So you can see the profit margins of the company increased during this period, right? The EBITDA margins, at least the EBITDA margins and profit after tax margins increased. As we can see, they're growing faster than revenue. The net profit grew by 101%. Interesting, it grew lesser than EBITDA. There were, of course, depreciation costs. Maybe interest costs rose a lot. Maybe taxes rose faster than EBITDA growth. So, yeah, could be that. Then, Indian transmission market outlook. 9.2 trillion rupees of transmission capital expenditures are anticipated in India between fiscal year 2025 and fiscal year 2020 2032. This much capital expenditure is expected. I guess this will be government expenditure plus private expenditure. You can see the interstate and the intrastate. The what you can say the how do you call this? The segmentation, yeah, the role of interstate and intrastate in this expenditure. Transmission auction bids are expected to rise in fiscal year 26. So the number of expected bids for transmission is expected to rise. And this is interesting. Look at this. RDSS and LPS, these are both government schemes. One is related to financing, one is related to infrastructure upgradement. Okay. And for the transmission, power transmission and distribution sector, they've helped reduce discom overdues. So the India's discoms are not in the best of financial situation for like a long time. And for many years, they have failed to pay power generating companies on time, and they failed to pay the money till now. So a lot of money was still overdue, a lot of overdue payments. And these payments, not the debt, only the payments they failed to do, they should have done, they reached 1.02 lakh rupees. So they owed power generating companies and other companies around 1.02 lakh crores worth of payments. 1.02 lakh crores worth of payments for like the power they're already provided, the companies that provided to the discoms. So they were not able to pay them back. But these schemes helped this amount reduce to 26,000 crores for fiscal year 2024. And as far as I remember, so December 2025, these overdue payments, these specific overdue payments that they should have done earlier, they had not paid yet to the power generating companies. This amount has reduced to, I believe, 5,800 crores, 5,900 crores. So massive, massive decline in that, and can indicate that maybe discom situation, the financial situation of discoms have at least stabilized, maybe not getting that much bad or worse, that much worse. Then trusted by industry leaders. These must be the clients. We got, the trio: DGVCL, PGVCL, MGVCL. We got Adani, we got Getco, Larsen Tobro, HALE, BHEL, Reliance, even Worry, Suzlon, Wellspun, CleanMax Solar. Okay, so catering to a lot of renewable energy companies, traditional energy companies, even Larsen Tobro. Okay, that's a construction company. Reliance, all right, wind energy, Suzlon, solar energy. So you can see the number of clients it's catering to. So that was it. There was Viviana Power Limited, and yeah, the company is aiming for some truly, truly massive growth.